In 1987, the stock market crashed in a single day. It was called Black Monday. The Dow Jones fell over 22%, the largest one-day percentage drop in U.S. history. Trillions of dollars vanished almost overnight. Panic swept the globe, and investors were left stunned. Could it happen again? Today, we're hearing echoes from the past. With Donald Trump hinting at new tariffs, some as high as 60% on Chinese goods, many are wondering, are we heading toward another market meltdown? Could Trump's trade war bring another Black Monday? To understand that, let's look back. Black Monday happened on October 19, 1987. It wasn't caused by one single thing. It was a combination. Overvalued markets, computerized trading, fear of rising interest rates, and geopolitical unease. But the key factor? Panic. As prices started falling, computer programs kicked in. They sold more stocks. That selling triggered more selling. And in just one day, the market collapsed. Fast forward to today. Trump is back in the spotlight, and he's talking tariffs. Big ones. During recent speeches, Trump has promised a sweeping tariff plan. He wants to raise import taxes on Chinese goods, and maybe even put universal tariffs in place. His argument? Protect American jobs and punish unfair trade practices. But critics say it's a dangerous move. Here's why. Tariffs raise costs for companies and consumers. They can disrupt global supply chains, and they often trigger retaliation. When the U.S. hit China with tariffs in 2018 and 2019, China hit back. Markets swung wildly. Farmers lost key export markets. Companies faced rising input costs, and consumers paid more. Now imagine doing that again, but bigger. The global economy in 2025 is already under pressure. Interest rates are high. Inflation is still lingering. Debt is piling up, and geopolitical tension is rising. If Trump unleashes a massive tariff wave, it could rattle markets fast. Stocks could fall. Fear could spread. And automated trading systems could once again amplify the drop. Could we see another crash like 1987? Possibly, but not necessarily. Markets today are different. There are more safeguards. There's more regulation, but there's also more complexity, more interdependence, more speed. Algorithms still dominate trading, and investor psychology hasn't changed. Fear spreads just as fast as it did back then. And when it does, the fall can be brutal. So what should we watch? First, the details of the tariff plan. Are they targeted or broad and aggressive? Second, how does China respond? If they retaliate hard, things could escalate quickly. Third, inflation. If tariffs push prices higher, the Fed may be forced to act. And fourth, the markets themselves. If traders believe another trade war is starting, they may start selling fast. One thing is certain. Markets hate uncertainty, and tariffs create a lot of it. Will Trump's trade strategy lead to another Black Monday? Nobody can say for sure, but the ingredients are there. Political tension, economic strain, aggressive policy, and fear. History doesn't always repeat, but it often rhymes. Stay alert, stay diversified, and remember, in the markets, confidence is everything. Once it breaks, the crash comes fast.